Last week, we saw stocks come crashing down as recession fears are on the rise. Is the market about to go into a bear market, or is this nothing more than a buying opportunity? On Friday, when we look at the heat map, we see nothing but a sea of red, just a couple little speckles of green here and there. Nvidia was down 1.78%, Microsoft down 2%, Google down 2.4%, Amazon down 8.78%. And we have a lot of things to worry about in the market. A closely tracked recession indicator, the Sahm rule, has now been triggered. Here's what that means. Now, the Sahm recession indicator signals the start of a recession when the 3-month moving average of the national unemployment rate rises by 0.5 percentage points or more relative to its low during the previous 12 months. And let's go back and look in history and see how long was a recession actually called? Was it before or was it actually after? And if you guys go back and look all the way from 1953 to the current time, you'll find that normally it's somewhere in between 2 and 3 months prior to where the Sahm indicator actually triggers off. Now, there was one time back here in 1974 where it was actually 8 months prior to that. So that would basically set the stage that we could potentially be in a recession right now. And we look right here, that's exactly what we have unfolding right here, right now. But is it a time to be fearful in the market, as we saw the fear and greed index actually ticked into extreme fear at some point on Friday before coming back into fear territory? On Friday, we saw the volatility index spiking all the way up here to 2966, almost spiking up to 30. But is this a little bit too far for the VIX? If we scroll this back a bit, we have been higher than that in other periods of time. In this time, we have a lot to worry about, not only the Sahm indicator, but also, let's not forget, we still have Israel, Iran, and all the conflict over in the Middle East. And if you just do a YouTube search real quick, you can see there's lots and lots of videos about this. Now, this is a concern that we most certainly want to pay attention to, especially if you're going to be trading the markets during the Asia sessions or even during London. And that would be because if indeed the conflict in the Middle East continues to rise up, remember that night on stream when the market was crashing lower? Yes, we came back and recovered, and anybody on the stream that night, and you guys probably had a great time watching me squirm out of that trade. Now, we're also seeing a lot of headlines like this. Bitcoin traders warn of tough Q3 as Nikkei echoes Black Monday 1987. Now, if you don't know what we're talking about, and in case you don't know, Thursday night on stream, we were talking about this. The Nikkei was absolutely getting destroyed, where the Nikkei was actually down over 2,000 points for one single session. We put the Nikkei out here on the daily chart. It is simply fallen off a cliff, and we're starting to see this, roll into other asset classes as well. Now, why is the Nikkei falling off a cliff? We come over and look at the dollar yen. Dollar yen absolutely getting destroyed as the Bank of Japan basically raised rates, while we have other countries like the Bank of England starting to cut rates, and the BOJ has been wanting to see the yen strengthen for some period of time, and that's exactly what's unfolding right now. But we also have some other problems in the market. If you think the stock market's going to continue to rally, look what we have in financials. We have the XLF. What do we see? Double top pattern. We gapped down on Friday, where with the MACD also being elevated above the zero line. We also had divergence playing out. Look at the MACD indicator. Look at the peak over here in the MACD indicator correlated with the high right over here. As we came up to retest that high, the second peak on the MACD indicator was slightly lower. Now, if we come over and look at the regional banking ETF, the KRE, yikes, it was getting smoked out here on Friday, where it was down 3.31%. Now, it did close with a hammer candle, and we had this huge gap. But look at the glaring warning sign. We had the MACD indicator just crossed to the downside. Could there be more selling to come? And if we look left, where would the KRE likely come down towards? I'm going to go ahead and draw this off. That's going to be from the candle wick right up here to about the candle bodies. This would be an area I'd want to watch. Now, if you look at the volume profile, notice where the most amount of volume is traded within this range. That's going to bring us down to about 46.87. We'll see if indeed the KRE tries to make its way down there. And keep in mind, the KRE tracks the regional banks. And keep in mind, a lot of the regional banks are holding commercial real estate. And we know that most certainly is a huge problem out here. Now, one thing I do want to warn you guys about, regardless how bad the stock market looks at this moment, or some of the ETFs and such, keep in mind, bear market rallies, aka dead cat bounces, typically are very, very violent. We come over here and we look, Buffett's Berkshire sells $3.8 billion worth of Bank of America in a 12-day selling spree. And what has Bank of America been doing? The big boys once again are getting out near the top. And we look at this right here. Buffett calls the top. Berkshire quietly dumps half its Apple shares amid unprecedented selling spree. And if we come down here and look at the amount of selling Berkshire has been doing. They've been sell. Just get out. And we come over and look at Apple. Apple on Friday tried to stage a rally only to close near the lower end of the session. However, given how bearish the overall market was, Apple being up $1.50 was actually a huge win. But when we look at Apple, left shoulder, head, potentially right shoulder over here, and right at the top, we had an island reversal. The MACD indicator still has a bearish cross of the two lines. Then we look at Nvidia. Nvidia also on the way down, but on Friday, Nvidia did stage a comeback. However, it was not enough to get it back in the positive. We look at the MACD indicator, still looking horrible at this moment. We look at AMD. AMD sitting here near the lows, closing down only 4 cents on the session. However, we can't say the same for Intel. Intel gap lower and it closed down 26% on the session. A huge decline out here for Intel. Now the question is that the low for Intel? We're actually lower than where we were back in 2002. And we got to ask ourselves this question as we zoom this back and we look at Intel. Intel at these levels are actually lower than where they were during the pandemic. Now, are we going to see more stocks and indices follow suit? I want to make everybody aware Apex 7 a massive 80% sale off all their valuation accounts, passing as little as 1 day, and you can also get a 150K account for only $40. You get a 250K account for only $40, and you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. We look right over here, serious mistake. Fed Powell under fire after jobless rate rises. Now, let me know in the comment section down below, do you guys think Jay Powell made a mistake by not cutting rates? Should he have already been on the rate cutting spree? Because when we look at the Fed watch tool, we can see, look how many consecutive interest rate cuts the market is pricing in at this moment. And I do want to remind you guys of something that's very obvious. All right. If you go back and study history, every time the Fed has went on an aggressive rate cutting campaign, the market has always had devastating corrections to the downside. Now, when we look at what Cramer had to say, NASDAQ futures are dropping as if the apocalypse is coming. A reminder to all, it's not. The panic over Amazon is somewhat excessive. I repeat, buy at 160. Are we headed into a recession? Jim Cramer responds, no, of course not. You know, Jim Cramer has quite the track record of being wrong time and time again. And we come over and look at Amazon right now. He looks like he could have been right by saying buy at 160. However, is it going to hold? Again, we're seeing a lot of destruction out here in the stock market. Are we going to see another devastating leg lower, or are we going to be able to come back filling in some of these open gaps that we have up above us? Now, when we look at some of the other warning signs, right? The Sahm indicator already indicates that we are in a recession or very near to it. Then we look at the yield curve inversion. Now look at the 2-year versus the 10. Now when we look at the yield curve inversion, look at this. We are going up trying to get uninverted. And that's exactly when bad things happen in the market. If you guys listen to the FOMC press conference, Jay Powell said, we are not in normal times. Everybody said inverted yield curve. We are going to be in a recession. And, you know, he was almost taunting the market. And then what have we seen? 1 day later, all the selling has started in the market. We come over and we look at the Dow theory sell signal. While the Dow was up here making new all-time highs, the Dow theory was giving us a heads up that everything is not good under the hood. We are going to come under even more and more selling in the very near future. Now the question I want to ask everybody, is this nothing more than a correction, or is this going to be the start of a new bear market? Now, if you guys remember, I shared with you guys this charts time and time again, where it shows that NASDAQ has peaked out more times in the month of July than in any other time in history. And if we come over here real quick and we look at the QQQs, when did it peak out? Oh, right in the month of July. Is that a coincidence? I don't think so. We come over and look at the SMH real quick and look, what do we have up here near the highs? As the price came up and made a new high, what was the MACD indicator doing? It was giving us a big heads up. Watch out, something is wrong. We are likely going to go ahead and go lower as the momentum to the upside as we came up and made the second high was showing us that, hey, be careful. The market could be in a correction territory. Where do we come down to? Right near this high volume area. Now, I do have a problem in the fact that we have a gap from Friday. We have a gap way up here. But with that being said, we have gaps way below us as well that still have not come back and get filled. Now, things are starting to get a little bit excessive to the downside. At some point, we will get that dead cat bounce. If we measure from high to low, we can see the SMA AMH is down 24% from the highs to the current levels. Then as we come over and we look at the small caps on Friday, the Russell 2000 down 3.5%, basically closing with a candle of indecision. If we look at it, we have a wick on top, we have a wick on the bottom. MACD indicator, however, is crossing to the downside from elevated levels. Now the question we have to ask ourselves, do we continue to fall lower trying to fill the gap below us, or are we going to get a relief bounce on the way back up? And I think a lot of that is going to have to do with what goes on in the Middle East. Now as we come over and look at the diamonds, keep in mind we have this resistance zone right up here, and I warned you guys both with the IWM and the Dow. I said watch out, we have a shooting star type of candle right into resistance. And what do we have up there at right here near the highs? The MACD indicator was also confirming there is weakness out here in this market. We come over and we look out here on the weekly chart for the Dow. What do we see? Well, huge MACD divergence as price was making new all-time highs. The MACD indicator was simply not confirming those highs. And if we look out here on the weekly, the next high volume area is down here about 386. However, if we can flush to the other side of this volume, watch out, we have some minus development areas that really run anywhere from 367 down here to about 350. That could be an area where the market retraces down towards, and then we get a nice juicy bounce. If we measure from all-time highs to the bottom of that minus development area, that's going to be about a 15% correction. If we make it to the top, that's going to be about a 10 or 11% correction in the stock market. Then as we jump over and we look at the QQQs on the weekly chart, what do we see? We've had the MACD cross from elevated levels to the downside, and we had that doji candle that marked the high, and now we've actually had 4 down weeks in a row. Are we going to see 5, 6, 7, 8? If we look over here on the composite profile, we're coming in right near a high volume area. We're not there yet. I want to grab our Fibonacci retracement tool, measure swing low to the swing high. Now, as we look at this on the weekly chart, what do we see? We're right near the 61.8. And I got to tell you, this level must hold if indeed we're going to get a meaningful bounce up. If we break below here, we're going to 78.6. We break the 78.6, we're going to have a 100% correction, which would actually bring us right near this high volume area at about 407.84. Now, if indeed the NASDAQ were to drop all the way down towards the high volume area, that would be about a 19% correction. Where it stands right now, the low from Friday, we're down almost 12%. Then as we dive down and look at the daily chart, you can see the MACD indicator just barreling down towards the zero line. Now we have a gap right over here. We have 3 gaps to the downside that have not been filled. The one from Friday, the one from the week before, and then the one as we were coming off these highs. If we look over here to the left, now we are starting to come into a little bit of support, and you can see we're coming into the nice high volume area over here on the composite profile as well. Then we dive down and look at the 4-hour chart. We're starting to set up a little bit of divergence, which would make sense that we get a bounce in the market. However, any chart pattern we see setting up could absolutely be destroyed with what's going on in the Middle East. Over here on the 1-hour chart, look what we have. As we've come down and made a new low, we've consolidated down here, but look at the MACD indicator. It is not lower than where we were over here near these lows, which suggests that maybe momentum to the downside is a little bit overdone and we start to get a bounce back up, maybe filling the gap over here. Or the bears would tell you that, hey, this is nothing more than a bear flag and we're going to continue to go lower. If we break this low, watch out, we're likely going to go substantially lower. Out here on the 30-minute chart on Friday, we were able to just barely get a cross of the MACD indicator lines. And we look, we did nothing more than we had a big gap down, we push, and then we have a consolidation. Now, if we can break above upper part of this consolidation at about 450.40, then I'd want to target near the highs on Friday at about 453.61. Then I'd want to see, can we run all the way up here, potentially fill in the gap? Now, if we grab our Fibonacci retracement tool and we measure from the high down towards the low, notice where the gap fill is, right near the 50% Fibonacci retracement level. That's going to be something I will want to watch. However, since the move has been so strong to the downside, I want to pay very close attention to that 38% retracement. We could simply rally right up to there, reject and come back down, and then we'll see at that point, do we put in a higher low or do we simply flush all the way back down, taking out the lows in the market? Now, as we come over and look at the futures markets, what do we have? One of my favorite chart patterns setting up. Looking at the weekly profiles, we're closing below value area low, which comes in at 18,803.75. We have the point of control at 18,939.75, and value area high is going to be up here at 19,516.25. Now, notice we did have 2 candles that closed higher than where they actually opened, but look where we're hanging around near that high volume area. And if we zoom this chart out, where would be the next stop on the market? We still have this untested point of control down here, which is really going to come in somewhere in the ballpark of about 18,158. you can see we just had a cascading effect, down, 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 and we're simply not able to get it bounced just yet. Now, anytime that we do close below value area low, you guys know my MO. I expect that either this week or next week, we'll at least make an attempt to rally back up towards this area. And the fact that we have a structure breakdown point. Now, I want to go ahead and mark this off. This could be anywhere from this candle wick right up here to the candle body off the 4-hour chart. This is going to be a magnet zone. And what do we have right near it? We also have the value area low from the prior week. Now, any of these minus development areas within the profile, the very thin areas on the profile, could be areas where we see the market try to retrace back to and then potentially reject and start coming back lower. As we look at the daily profiles, you can see on Friday, we closed near the lower end of the range. And we look at the volume profile levels, we have value area low coming at 18,433.00. We have value area high coming in at 18,618, and the point of control will come in at 18,544.00. Now, what I'm going to say is if we can stay above value area low, I'm going to give this a shot for a bounce on the way up. However, I'm not very optimistic that it's going to be a meaningful bounce. I think any bounces in the market are likely going to be nothing more than selling opportunities. However, it doesn't mean we can't play the bounce. And keep in mind, on Thursday, we closed below value area low, and this is still going to be a high probability target. And what that says is either Friday or Monday, we're likely to come up towards that area. We'll see if that holds true or not. That comes in about 19,025.50. That is one heck of a move from the current price point. If you look from the close on Friday up towards that level, that's about 510 points. That would be a massive move on the way up. Now, as we come over and look at the SPY, we can see out here on the weekly chart, we have a MACD cross to the downside, but we've also had divergence. As price has been making new all-time highs, the MACD indicator is simply not confirming those highs. And we got to really ask ourselves the question, are we going to make it down towards the higher volume areas, or is this going to set up some type of head and shoulders pattern out here on the weekly charts? Then we dive down to the daily chart. You see, we do have a buying tail on the bottom of the candle from Friday. The MACD indicator just now starting to enter below the 0 line. On the 4-hour chart, we don't really have any signs of MACD divergence yet. However, this is an area where I do think we could get a bounce. Now, unlike the NASDAQ, we have a gap from Friday, but we filled the gap that was left from the prior week, and we still do have a gap up above us as well. Then on the 1-hour chart, what do we see? MACD indicator down below the 0 line, and it's looking like it's trying to firm up here just a bit. But the question is, are we about to take another leg lower before trying to come back and potentially fill in the gap from Friday? As we look at the profile, you can see we started to try to firm up, and on the MACD indicator, we had a fresh cross of the 2 lines. And I do think it's highly probable that we are going to try to fill the gap sometime this week, unless tensions in the Middle East continue to flare up and really cause some headaches. As we come over and look at the weekly profiles, notice we're closing way below value area low, which is going to come in at a price point of 5437.75. The point of control will be 5508.75. Value area high will be 5575.25. Now notice the last couple candles, we do have wicks on the top and wicks on the bottom. Now, normally if we get a context of a downtrend, we start seeing wicks to the upside, this could be an early sign of a reversal pattern. You might say, Mike, what are you talking about? Wicks to the upside, like over here, the market goes down. Well, not when they're in the context of a downtrend. That could be like you're coming up to a red light. This is more of a yellow light. This isn't all systems go, we're going to go up, but it puts us on alert that we need to be on the lookout for a retracement on the way up. And just look at how straight down this move was. We went 269 points without any type of retracement out here last week. Then as we come over and look at the daily profiles, notice we have an untested point of control above us at 5472.25. If we zoom this out a bit, we also have a point of control down here at 5294.75. So we got to be open to the idea we could flush lower. The volume profile shape from Friday is going to represent a lowercase b. Now, what that signifies to me is if we can get above value area high, then that's going to increase the probabilities that we're going to explore the upper third of the range. And I kind of like this minus development area right over here, somewhere in the ballpark of 54.44 Now, value area high will come in at 5376.25. The point of control will come in at 5357.75. Value area low will be 5336.25. In the event that we break above value area high, we start coming down, I then want to be back on the sell side of the market, targeting the point of control, targeting value area low, targeting that untested point of control down here at 5294.75. And I got to be honest with you, if you're looking for a bounce in the market, to me, it would make the most sense if we could simply come down, flush the lows, maybe come down, hit the point of control, maybe not, and then reject and come back up. That way, anybody that was going long on Friday, their stop losses are probably below the lows, flush out some of those longs in the market, entice new breakout traders to short this to the downside, then you wreck both traders, then we can start to get that lift on the way back up. Now, if you guys would like to learn if Apex is still paying its traders, watch this video right here.